Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and it's the 16th of April, 2024. Alright everyone, let's get into it. So apologies for missing yesterday's episode, everyone. I know that a Monday episode, rug fuel, is always bad because obviously there are no episodes on the weekend, so it's been 3 days since the last refuel, but I'm back today. And just before we jump into the news, I wanted to quickly give a heads up that I will not be able to do a refuel from May 1st to May 3rd. So May 1st, 2nd, and 3rd, I will not be doing a refuel. That's Wednesday, Thursday, Friday, because I will be at ETH Sydney. So I'm hoping to see whoever is going at ETH Sydney. I think the actual kind of conference is happening on like the Friday, Saturday, Sunday, but there is a couple of side events here and there, and I'm sure some kind of meetups and stuff, so I'm hoping to see whoever there really. I know that there isn't going to be a lot of international folks there probably because it's just so far away. You know, I always complain that for me it's really far to travel to Europe, you know, the US and really most places from Australia, but it works the other way as well, obviously. So yeah, but I still think it's going to be really great. I'm judging the hackathon, so I'm really looking forward to it. And yeah, I mean, it's very close to where I am in Melbourne, so only an hour and a bit of a flight there, and no jet lag. That's the main thing, so I'm looking forward to it there. But just wanted to give you guys a heads up, but I'll keep you up to date on that and remind you as we get closer there. But going to jump into the news now. I have left a bullish rant for the end of this episode, so if you want to listen to that, it's all about the markets. Hopefully won't go too long about it, but I think that it's relevant right now because it seems to be a lot of bearish energy out there right now, and I've got to set that straight. I've got to do my bullish rant to set that straight. But first thing I want to jump into was this announcement out of Hong Kong that they have approved applications for spot BTC and ETH ETFs managed by China Asset Management, Bozera, and Hashkey. And this has kind of got the hive a bit stirred, the hive being, I guess, like crypto Twitter, a bit stirred. You know, there are people saying that, okay, well, this is not really that bullish because Hong Kong is only small potatoes compared to the US, which isn't necessarily wrong. Like, Hong Kong is obviously very small compared to the US, especially when it comes to ETFs, as ETFs are really a US phenomenon and have been really, really popular in US markets, but they're being exported, right? Other markets around the world continuing to adopt the ETF standard in different ways, like there's ETPs and ETNs in Europe, I believe. There are ETFs here in Australia. I don't know what it's like elsewhere, but this vehicle, this tax-advantaged vehicle that is just like completely managed by these large asset managers, they handle everything for you. All you really have to do is buy and sell it, and you can trust them to handle everything for you because it's all fully regulated. It's obviously the TradFi system here, but they're obviously getting more integrated with crypto. It makes a lot of sense, right? It makes a lot of sense from a bunch of different perspectives here. So I expect this market to grow, and obviously it's funny that Hong Kong has approved a spot ETH ETF before the US has approved one. And honestly, I'm not going to go on another rant about the US ETH ETF at this point. It's a waiting game. You know, as I've said before, I kind of changed it to like late April. If we don't hear anything by late April, I'm going to like lose all confidence in May 23rd being an approval there. But I think at this point, you know, whether it's approved or denied, the market is pretty much priced in a denial. So I think that even if it gets denied, the market action is going to be quite muted there. But I'll probably go over that when I talk about the markets a bit later here. But yeah, just great to see that Hong Kong has approved these things here. And I'm curious to see what the demand is actually like. I'm curious to see what the numbers are like, right? Because as I said, like their ETF market is tiny compared to the US, but they're ramping it up and they're trying to ramp it up relatively quickly. And especially when it comes to crypto, right? This is an asset class that Hong Kong and I guess like China broadly have not been very favorable of in the past. You guys know that. I know China's banned Bitcoin like 1 million times at this point. They kicked out the Bitcoin miners, which had to, completely leave China and go elsewhere. So they've just generally been hostile towards crypto, but they seem to be embracing crypto more. I know that Hong Kong exists kind of separately to China in its own special economic zone. I think from my reading, I'm not an expert on Chinese politics or Asian politics generally, but from my reading, Hong Kong basically exists as a way for China to have its cake and eat it too. What I mean by that is essentially it gets to have that authoritarian control, that CCP control over all of China mainland as well as Hong Kong. But Hong Kong gets this special designation of being like a special economic zone where it can be more progressive and more loose and more kind of like Western style economic system, TradFi system or financial system than is available in mainland China there. So there is basically like a two-tiered system here under the one umbrella still of the CCP. That's my understanding, but someone's better versed on Chinese politics, please let me know there, because I think I triggered a little bit of people when I said that China was getting these ETFs, not Hong Kong. To me, I mean, it's like the same thing. Like, you can say, oh, they're distinctly separate. I'm like, yeah, okay, maybe from like a financial perspective, from like an economics perspective, but from like a government social perspective, they're definitely under the same umbrella there, at least from my read. But as I said, open to being corrected on that one there. We're going to leave that one at that. We have a fresh update from Coinbase today. Well, I guess like some fresh Coinbase versus the SEC news. Now, this is Paul Grewal, Coinbase's chief legal officer, tweeting out that yesterday Coinbase filed a brief asking the court's permission, or not yesterday, I think this was like 3 days ago. Coinbase filed a brief asking the court's permission to seek an interlocutory, that's how you say that, appeal in Coinbase's SEC case on this controlling question, whether an investment contract requires something contractual. We think it does. The SEC disagrees. Now, from what I've read from the legal experts, this seems like another long shot from Coinbase to file this appeal against the SEC here, but I obviously agree with Coinbase's position here that an investment contract requires something contractual, whereas the SEC does not agree with that. They believe that an investment contract can exist without an actual contract. And this goes back to, I think, like how the securities laws were written, like, 100 years ago or 90 years ago, and about how they were actually written to be purposely broad, because at the time, the people writing these laws and, the regulators in the room knew that there wouldn't just be like one asset class or two asset classes. There's all types of different asset classes. And the SEC, to be an effective regulator, needed to have a kind of broad set of interpretations into the law they could take in order to go after any kind of bad actors that would try to get around this or try to essentially find loopholes in this, which makes sense on the surface, but in practice, as we've seen, because these laws haven't been updated in so long, what ends up happening is that they're so dated and they just don't apply to some asset classes, or they don't apply cleanly to some asset classes, especially when it comes to crypto here. So obviously I'm rooting for Coinbase here to win this kind of appeal, but as I said, it is a long shot. It is not something that is typically won by the defendant here, and the SEC obviously disagrees because they want to have as broad a strokes as possible to go after everyone that they can here. But I'd be more sympathetic to the SEC's cause if they actually had clear guidance on crypto for these companies to follow, but they just don't, right? Like that's the heart of this issue when it comes to the SEC versus crypto just generally. There's just not clear guidance. There's not clear guidance on what you can and can't do when it comes to crypto stuff. There's not clear guidance on what happens if you actually do run afoul, or how to essentially not ask for forgiveness, but basically make it better if you run afoul and you didn't know you were running afoul, like stuff like that, right? Or make amends for it. Like, there's just nothing like that. All there is the SEC being incredibly hostile towards everything crypto and not giving any clear guidance on anything. And we all know that. I'm preaching to the choir here, but I'm going to keep, an eye on what happens here with the SEC or with Coinbase doing this appeal, and I'll keep you guys updated on that. All right, moving on to some tech-related news. So Giorgio is here from Paradigm, who is the lead of the Reth client effort here, to announce, I think today, that they have open-sourced something called the Reth AlphaNet. So the Reth AlphaNet is an OP stack-compatible testnet rollup that maximizes Reth performance and enables experimentation of bleeding-edge Ethereum research. Now, what's really cool about this, and you can actually read this in the announcement post, I'll link it in the YouTube description below, but my read on this is that Reth would work really well, or all the research and development going into Reth would work really well with everything that Base is trying to do right now. Because as you guys know, Base is trying to scale up their execution layer, which is the EVM, to 1 gigagas per second. Now, to achieve that is a huge feat. Like, to get there is a long journey, and it's going to be a huge feat to get there because of the fact that they're trying to inch out as much performance as possible out of the EVM, and to do that, they're going to need to make better clients. They're going to need to make more performative clients. Now, the most performative, I think, execution layer client right now, I believe, is Reth. And now, Reth is a very new client. It is definitely not ready for, large-scale production. I think you can run it with your, home validators if you want, but it's definitely not ready for large-scale production or anything like that. But it is being worked on actively, and it is something that can apply not just to L1, but all the learnings can apply to these EVM-compatible L2s. So I think, obviously, given that the Reth AlphaNet is working with the OP stack, this is definitely going to help Base in a really big way here, and it's going to allow Base to scale up massively. Now, there's also an incentive thing here as well, where Paradigm is a huge backer of Optimism, and Paradigm is incubating the Reth effort here, and one of Paradigm's co-founders is, well, not anymore. One of Paradigm's former I guess like he's still a co-founder, but like he left. It is what's his name? Fred Ursum. He was the co-founder of Coinbase alongside Brian Armstrong there. So obviously there's like a bunch of vested interests here to make this kind of succeed and to help along with this and to basically play off of the different investments at play here. But that's a good thing. It's a net good thing that the financial incentives are leading us to getting more performative L2s and better performance for everyone. And as I said, it is open source. This is open source, so it really does give back to the community. It's not some closed source thing that they're building that no one can benefit from. Everyone can benefit from this, which is obviously really, really awesome there. But you can go read this announcement post for yourself. I'll link it in the YouTube description below for you to do so. All right, just a tweet here from David Mihal that I thought was quite interesting. So I've been talking about this for years at this point, but when it comes to EIP 4844 or Blobs, they share a separate fee market to Ethereum L1. As you guys know, as I said, I've been talking about this for ages. But David here posted a couple of pictures where he said that the Ethereum L1, normal L1 gas price went to 500 Gwei during the sell-off that we saw over the weekend there, and the Ethereum Blob price stayed at 1 Gwei, or which is basically free, which illustrated the independent fee markets that we see here. And this is what I've been banging on about for a long time now, is the fact that now that we have these independent fee markets, essentially any spiking of gas fees on L2s is going to be because of the execution side, where essentially the execution side gets hammered like we saw with Base, and then those fees go up because of that. It's not because of the data side, which is at Ethereum L1. And when Ethereum L1 has these crazy fee spikes, you're not going to see the same fee spikes on the L2 side because the data doesn't spike. It stays basically free. Blob fees stay basically free, whereas normal Ethereum L1 is, as you can see, up to 500 Gwei or even above that there. Now, I will say there is some correlation between, I guess, like when L1 gas fees spike up like this and L2 execution fees, because obviously most of the time when you see L1 gas fees spike up like this is because of some market volatility, whether that be volatility to the upside or to the downside. It's still general market volatility. And when you see that, basically what you get is essentially, the fee market going crazy on the L1 side, but also on the L2 side, because the L2s still work off the same markets, right? So the L2 execution side may go crazy as well, and you may see fee spiking there. But I just really enjoy the fact that we have separate fee markets between the Blobs and the Ethereum L1. And the fact that it's actually working and we can see it working, and the fact that the L2s aren't influenced by this anymore. So I just wanted to point that out there because I thought it was a really cool thing to kind of analyze there. All right, so I've been talking a bit about Lido's market share coming down recently. Well, I do check this dashboard from Hildobby quite regularly. It's his Ethereum staking dashboard. And as you can see here, Lido's market share is now down to 29%. Now, I believe it's actually lower than that. If we go down here and we kind of see the current market shares, Lido's market share is at 28.8%, and Coinbase is at 13.8%. So they've both come down quite a bit recently. Obviously they're still quite high, but they've come down quite a bit recently. And as you can see, it's mainly due to a lot of these other kind of players growing, especially players like ETHFi, which is about to flip Binance actually and be number 4, which is just a crazy amount of growth there. But there's been others here, as you scroll down, you can see them like Renzo, for example, Mantle, a bunch of others. But what illustrates this even better is these tables here that show you what the inflows have been like over the past week, past month, and past 6 months. As you can see here, over the past 6 months, ETHFi has almost doubled Lido's ETH that it's taken in. Like, that's just insane. And that's just one of these new entities that have kind of shown up here. Renzo has almost taken in as much ETH as Lido over the last 6 months. Same with Mantle, same with same with Mantle, and then you've got the longer tail here like Kiln, Everstake, Swell, and Puffer isn't listed here, but Puffer took in a ton of ST, as you guys know, that it plans to vampire attack, which basically means withdraw it directly from Lido and then restake it on their Puffer validators, and that's going to take another chunk away from Lido here. So we could really be seeing Lido go to like 28, 27% relatively soon with that vampire attack there, and you guys know that 22% is that kind of well agreed upon threshold that everyone was talking about, basically saying that we need to get, no entity should be at above 22%. And I don't know if we're going to get there before Lido strikes back, because this is the main thing I wanted to talk about, is that yes, Lido's market share has come down a lot, but obviously we know that a large part of that, or pretty much most of that, is due to the fact that people have been going with these other staking providers for restaking, right? They're LRT tokens instead of just LSTs, and the fact that they're doing token incentive programs, which is driving the activity there. Which there's nothing wrong with that, because Lido also did token incentive programs at the start of when they, started and they got going there, and it's obviously put a lot of pressure and competition on Lido now, which is a net good for everyone. But what I mean here by Lido striking back is that I'm for sure not. I mean, I don't know if this is actually kind of publicly being talked about on the forums, but like I assume that Lido is working on their own kind of LRT, or converting Lido into an LRT, or they might just go scorched earth and make Lido into a restaking platform on its own, like get outside of Eigenlayer altogether. They just become their own restaking platform here. I'm going to be very curious to see how they manage to do this, because of the fact that Lido doesn't have any tokens left to give out. So they've got a few different options here. Maybe they can take from their existing treasury and give those out. I meant like they've already got tokens. They have to take it from the treasury. They can't just take it from an existing pool and pay it out, or they don't have a token yet. People can't farm them to get a token. They already have a token. Their incentives can come from their treasury, but then they have to go through the DAO to do that, right? And it's a lot more messy than just having this unilateral control over the tokens early on. But they can do that. So I'm assuming they're going to strike back in some way, especially once the puffer vampire attack happens, which I think is happening soon from what I've seen from their roadmap there. So yeah, they're under the pressure, that's for sure. And they're under the pump in order to get something out, in order to stop bleeding market share here. But I mean, even still, like they've come down from almost 33% down to, let's say they get down to 28%. That's a 5% reduction in their market share. That is pretty big. But when you actually kind of put the numbers here, 5% reduction in market share, none of the other providers except Coinbase even have over 5% market share. So that just shows you how dominant Lido has traditionally been here. But I'm very glad to see that they have competition. And I'm super glad to see just a more distributed and more, I guess, like diverse staking ecosystem. And, I saw some people kind of posting on Twitter saying that, it's arguable whether all these other providers are better than Lido. And it's like, well, okay, we can argue over the differences between the providers, differences between the staking pools, differences between the risk profiles, and so on and so forth. But I think we can all agree that having more of these providers and more of them being independent, more of these independent pools, is a net good for everyone. I don't see how you could say that was bad. And I really don't like that line of thinking, because it basically means that, okay, well, we should only settle for Lido and we shouldn't compete with them, and Lido's the best, Lido's the best we can do. I think that's a really bad line of thinking, especially in a free market. And crypto is one of the freest markets that we have. And I just don't think it's a great way to think about these things. So that's when I look at this, I look at the fact that, okay, yes, these other things may be more risky. Maybe because they're newer, they might have a higher chance of a bug in their contract, and so on and so forth. But hey, Lido shouldn't just exist as this pristine thing that everyone thinks is perfect. They need competition. They should have competition, and they should compete freely in the free market, rather than having I wouldn't call it a monopoly, but they basically had like a really unique starting point where essentially they were first to market. They got a lot of market share in before staking withdrawals were enabled. They started, in the bull market, and then in the bear market, no one could withdraw from Lido. So essentially, what happened is that the fair value of STETH went down a lot because people were selling in the open market. But by the time withdrawals was enabled again, that fair value basically went. That arbitrage opportunity went away. STETH went back to fair value, and no one was withdrawing from Lido then. So now that they've got actual competition, what ended up happening is that there may not be much ETH being withdrawn from Lido directly right now, but a lot of ETH is going into other providers now instead of Lido. So essentially what's happened is that not only has their relative market share gone down, but their real market share has also gone down now, as opposed to these other kind of solutions out there. So yeah, it's just been cool to see that competition play out there, and I'm hoping it continues there. All right, so a big announcement from Arbitrum today. So they've announced that fraud proofs have taken them to a stage 1 rollup, but today with Bold, we're on our way to becoming a stage 2 rollup. So Bold is a permissionless validation mechanism on Arbitrum, which is now live on testnet. So you can read this Medium post, which I'll link in the YouTube description below to check out what this is. But yeah, I mean, it seems like Arbitrum is actually going to be the first stage 2 rollup, or at least like the first stage 2 rollup that has activity on it, because I know there are some other stage 2 rollups out there right now. If we go to l2beat.com, you can actually see these. So there is other stage 2 rollups like dgate v1 and I believe Fuel v1, but I mean, Fuel v1 has like nothing in it, like there's not even $1,000 of TVL in it, and dgate v1 has like $60 million of TVL in it. So very small potatoes, as we say, compared to Arbitrum 1, which has $16.2 billion of TVL in it. So they are stage 1. The next ranked stage 1, which is DYDX v3, only has $333 million TVL in it. The rest of them a stage 0 or non-applicable here. So Arbitrum getting to stage 2 is a pretty big deal. I believe that by the time they get to stage 2, OP stack change will probably be at stage 1. But yeah, Arbitrum's just killing the game when it comes to the fact that they're basically getting to stage 2 here, and they're doing that with Arbitrum Bold. And I've talked about Bold before, but the main benefits are permissionless validation. So essentially, anyone can run their own validator nodes and contribute to the consensus process, helping to secure the network and validate withdrawals back to Ethereum. There is enhanced security, pooled challenge funding, and a bunch of foundations putting into place as well here. And this is really critical here. Anyone running their own validator nodes and being able to contribute to the consensus process is critical for allowing for permissionless fraud proving, because fraud proofs are currently whitelisted on Arbitrum. You can see here that they currently allow 14 whitelisted actors watching the chain to prove that the state is correct. But by replacing this with permissionless validators via Bold, Arbitrum chains will be able to address this particular concern of centralization and move further towards greater decentralization and achieve a greater Ethereum alignment. So you can go read the blog post for a full breakdown of this. I'll link it in the YouTube description below. But it's great to see that Arbitrum is well on its way to achieving stage 2 here, and I believe the OP stack chains will be here one day as well, but they still need to get to stage 1. They're going to have permissionless fraud proofs from the get-go, I believe, so they're going to, but then they're going to have other things that they still need to hit to get to stage 2, and you can see here that for Arbitrum 1 to get from stage 1 to stage 2, the fraud proving needs to be open to whitelisted actors. Upgrades unrelated to on-chain provable bugs provide less than 30 days to exit, so it needs to provide more than 30 days to exit. And the Security Council's actions are not confined to on-chain provable bugs. That has to be confined there. So to get to stage 2, you not only need permissionless fraud proving, you need those other two things as well. So if OP stack chains get permissionless fraud proving but still don't meet those other two criteria, then they're only going to be stage 1. They're not going to go to stage 2. So there is multiple criteria here. There isn't just like the permissionless fraud proving. There's more than that here. And as there should be, honestly, we should be, the bar for getting to stage 2 should be quite high because then we have better guarantees around decentralization and security there. But yeah, anyway. You can go give that a read from the Arbitrum team. I'll link this in the YouTube description below for you to do so. All right, last thing here on the L2 front, just wanted to kind of highlight this metric from Uniswap. So they kind of have been on base for a while now, their protocol, but the growth has been staggering over the last 2 months. So they said here that in January, the base volume on Uniswap protocol was $329 million. In February, it was $675 million. But then in March, it was almost $10 billion. And then halfway through April, it is already at $7.8 billion. So essentially, going from Jan to Feb, they like doubled their volumes. But then going from Feb to March, they're like more than 10x their volumes. And it looks like they're going to do another near 2x this month, depending on volatility, right? Depending on the activity that happens there. But yeah, it looks like April is going to be an all-time high record month. And it just goes to show like how much activity was happening in March. I know a lot of it was due to like meme coins, a lot of mania around that. And obviously over the past few days, well, really the bulk of it, the last 2 weeks, the prices have come down, especially over the weekend. We had a big crash, which I'm going to talk about in a sec. But still, generally, the volumes have been up massively here. And if you kind of look at this more than just like a month-on-month basis, maybe you look at that like a 3-month-on-3-month or 6-month-on-6-month or year-on-year basis. Yeah, it's just been an incredible amount of growth for Uniswap on base. And this is just Uniswap, guys. There are other DEXs on base. There are other protocols on base. So, and obviously Uniswap is on other L2s as well. So it's not just base here. which is crazy to me. So, I mean, I haven't looked at the numbers of ETH L1 plus the L2s for Uniswap volume, but it could be for the month of March over 100 billion there just on Uniswap alone. So that's pretty crazy there. But anyway, enough on that. I wanted to leave a bit of time here to go over the market. So I did give an updated market analysis on Twitter over the weekend where I said 2 weeks ago, I mentioned that I didn't think retail investors were here in any real way, and all the market action we had been seeing was led by crypto natives doing max PvP with a bit of a wealth effect from BTC getting new money via the ETFs. Well, given the brutal sell-off that has happened to most of the crypto market, I think I was pretty on the mark with my analysis. So where to from here? Well, Western man, I can't tell the future, but I do feel like at this point, the board has been reset and we can soon start a new game, which is the new the real retail-led part of the overall bull market. The bull market isn't over, we're just in intermission. So I've talked about this for months now on the refuel, probably going on like a year, I don't know, but like at least for the last few months, where I've basically said that I don't believe that the, normies, retail investors are here in any big way. Maybe there's a little bit of them here, but they're not here in any big way. And I want to define what I mean by like these retail normie investors. So what I mean by this is people who are literally putting in new money and that haven't touched crypto since last cycle. I'm not talking about the people who are here right now and they're putting, new money in, and have been around for a while and they're putting new money in. This doesn't apply to those people because those people to me are not the normies retail investors. They're already in crypto. They're just putting more money in. Yes, that's new money, but that money, it trickles in. It's not like a flood of money. And why it trickles in is because these people that are already here, they need to get money to put in the first place. They need to get paid from their job, which happens, once a week, once every 2 weeks, once a month. They need to make money elsewhere, whatever they're doing. It's not like a sudden rush of money. It's a continual drip. And I think I mentioned this like a long time ago, is that this is what happens in the kind of like bear markets, in the crab markets, and then in the early bull markets, you have that. For it to be a real retail-led mania bull market, you need a surge of new money coming in, net new money from net new people who have not been around since at least the last bull market or not around ever. And the only place that has been happening is the BTC ETFs. Outside of that, there has been nothing. Not on ETH, not on all the other assets out there, especially not on all the other assets out there. Maybe a little bit on ETH, but on all the other assets out there, it has not been happening. Meme coins, I guarantee you, most of the money that went into meme coins was crypto natives. Now, the reason why I'm so confident in this, and I'm even more confident now, is because we sold off, guys. And you know what didn't sell off very hard? BTC. And you know why? Because it has had new money inflows via the ETFs. But the rest of the stuff sold off absolutely brutally. Like even the darlings have sold off crazily. I mean, you can go on CoinMarketCap or CoinGecko and you can look at the performance of some of these things over the past couple of weeks and how brutally they have sold off. A lot of them have retraced their entire years, like the last 3 months worth of price action, which was basically all of their positive price action, because towards the end of last year, we did see some stuff pick up, but it wasn't really like the last kind of 3 months or so, like January, February, March, where it really kind of picked up steam. And again, to me, that was just crypto natives. Maybe we saw a little bit of new money coming in last month because it was getting really, crazy and there were headlines because BTC went to all-time high and all that, but it didn't sustain itself because of the fact that BTC did not sustain its all-time high. It is not in the media every day where the media is saying BTC hit another all-time high or ETH hit another all-time high. It was basically in there for a brief period of time, brought maybe some new money in, but other than that, it hasn't really materialized. And I want to stress here that this is a good thing, guys. This is a really good thing. And why this is a good thing is because I've been talking for a while about how I believe that the 4-year cycle is dead. I still think the 4-year cycle is dead, but that doesn't mean that we should just like accelerate the cycle to the point where we essentially turn it into like a 2-year cycle or something like that, or a 2.5-year cycle. I would rather the cycle last longer than shorter. And if you actually look at the chart, BTC for the last 7 months, except for April, was green monthly candles the entire, for 7 months straight. That is a crazy amount of positive price action for a crazy long period of time. And that was obviously because of the ETF hype. Like 7 months ago, was really where the ETF hype really kicked into high gear, and then it kept going from there. But now that we've had the ETF hype, now that the ETF narrative for BTC is fading, now that it has completely faded for ETH, the market is starved for a narrative. And because there is no net new money coming in, it can't create a new narrative. So essentially what needs to happen now, in my opinion, is that we need to have some time where we settle down, where prices settle down. I don't know if that means we're going to go further down from here. I don't know if that means we're going to go spike up again and then come back down again. But I'm more confident in sideways movement for a little while than I am in just kind of, local bottoming here and then going straight back up. I would rather there be, even just like a couple of months of sideways from here to set ourselves up a nice base so that we can reset, start a new game, as I said in my tweet here, and then we can lead us into the real retail-led bull market. And you'll know when it's the real retail-led bull market, guys. It is going to be a market where everything is going up and the stupidest things are going up. It's not going to be a market where these isolated things are going up. The things that are going to go up the most are going to be things you don't even hear about on crypto Twitter, because they're going to be from people that aren't even on crypto Twitter bidding these things up. So I just want to really stress to you guys that the bull market isn't over, but what we've had, since basically June of last year, really, I mean, you could argue that started there till today, has been crypto natives, and the only new money has been going into the BTC ETFs, once they happened in January there, which kind of kept us going for a little bit, kept BTC going, and has kept BTC relatively in a really good position. I mean, if you actually look at how much BTC has come down versus like most other things, not so much ETH. ETH's come down a bit more, but like not so much ETH. But like a lot of the other things out there have just come down so massively. And I wish I had a chart in front of me to show you guys what this kind of looks like, but I do have a chart on my other screen. I just want to put this in numbers for you guys. So if we go to BTC's like new all-time high that it's set and what the price is today, BTC has come down by about 15%, right? Now, I'm not going to go to a meme coin. I'm going to go to some of these other things out there. So let's go to something like Sol, for example, right? Sol is obviously, had a lot of positive price action into late last year, also into this year, and there's been a lot of stuff happening on Solana there. But Sol, since it set its not all-time high, since it set its local high about a month ago, is down around 36%, as opposed to BTC's 15%. So obviously it's down a lot more there. And I think ETH, and I'm not actually even sure what ETH is down here. ETH is down around 24%. So as you can see on the downside, ETH performs better than everything else, but BTC performs better than everything else, right? And then if you want to look at like the meme coins, I mean, Jesus, like Bonk, let's just check Bonk, for example, which topped, I believe, 4th of March. It's down 70%. So this is what I've been trying to, I guess, like get through to people around kind of speculating on these things. They can go up a lot short term, but then they can absolutely crash as well, short term, guys. Like, if you're trying to hold this stuff long term, I'm not even measuring this stuff against ETH, by the way, it's just against USD. This is where ETH really shines. ETH shines as a long-term, solid store of value investment. Same with BTC. They may not go up as much, well, they're definitely not going to go up as much as these long-tail assets over the short term, but they're also going to protect you from the overall market sell-offs and for overall market downside, as opposed to sitting in something else. Now, obviously, cash is going to be the king here, but that if you're trying to play kind of like the market trends here, maybe every 3 months or something, or every couple of months or something, you're going to have to play it really right to not lose out and not to not let net lose out, especially if you're somewhere where you have to pay taxes on these trades. It becomes a really shitty game. It becomes a game that consumes all of your time and for little benefit at the end of the day. So that's another thing that I thought was really important. It's just like, you got to look at these assets. You got to look at the fact that yes, they can go up a lot, but then you got to look at the fact that they have a lot more potential downside as well, because they're the first things that people sell off when the market is not going great. They're usually like towards the later stages of what people will buy when the market's going good, especially when it goes crazy, but they're definitely the first things people sell off when the market's not going good, and in big size, because they don't have as much liquidity, their market caps are much smaller, so they're a lot easier to move in either direction. And then also, if we go sideways for a little while, they're probably going to be the last things to recover, if they recover. And BTC and ETH will probably just creep up. But these other things, they won't really catch too much of a bid, and then they're just going to be crushed against BTC and ETH, right? So trying to play these things, very, very difficult to do. And that's why I've always said, ETH's a long-term investment. It's not going to give you 10 times returns overnight or anything like that. But it is going to let you sleep well at night, rather than holding one of these meme coins or anything like that. Nothing wrong with speculating on them, but you need to know what you're getting yourself into. But I think on that note, that's going to be it on the market side for today. There is other stuff that I could go into, but I didn't want to kind of rant too long about this because I want to give the market some more time to settle down and bake to see exactly where we are. But I'm fairly confident that we're in a reset period here. It's not going to happen overnight. It's going to take a little while to reset the market here, but I wouldn't be surprised to see ETH and BTC hold their ranges that they've had for a little while and then slowly continue up from there. But anyway, on that note, that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.